Welcome to the Titans of Industry show. Today I've got a first-time guest, Mr. Christopher Blasi, a veteran of the financial and technology industries, and he's the creator of the PMC Ounce. Since 2005, Chris has led the operations and expansion of Neptune Global Holdings, LLC. You might have seen him on the Wall Street Journal or Investors Business Daily, Market Watch, The Street, USA Today, and NBC. Chris, how are you today?
I'm very good, Lior. How are you?
I'd like to get into the PMC Ounce, which is the patented product you're in charge of, and obviously what Neptune Global offers. But let's start with some bigger picture questions. Gold has become increasingly harder to discover, more expensive to extract, and more elaborate to mine. From a supply standpoint, this obviously will put pressure on its price, but other than that, what, using your expertise, are the determining factors driving gold's price?
Sure. So we know that the fundamentals for gold point to a much higher price of gold. And in our world, there's a general feeling and consensus that there's a certain amount of price suppression that takes place because the gold price is still taking its cues from the futures market. And, there's a true disconnect between, demand and, what the futures market is telling us how gold is valued in US dollars. So, part of this is going to be when the demand just becomes at such a level that it kind of overwhelms and just makes it kind of impossible to continue to price, to keep the price basically capped. Right now, the demand, at least from the U.S. investor size or retail, it's not big enough to have that kind of effect on the overall market. But that day is coming.
Chris, has silver lost its precious metal premium as a monetary metal? In other words, should we expect it to trade around these levels and not the historical 20 to 1 or 16 to 1 or 12 to 1 ratio to gold as it did for many centuries when it was used for commerce?
So as far as silver goes, we're used to, and everyone talked about, that there is a historic ratio of 40 to 1 to gold, and we know it's up in the upper 70s right now, bearing on 80. And it's been going on for such an extended period of time that now people are starting to question whether silver even has a monetary role anymore. I don't think anything has to be permanent, like it needs to be 40 to 1. It is a little extreme right now, and at some point the gap has to close. It's also a lot easier in the futures market and such to kind of manipulate silver. Gold is a much bigger market, so I think silver is just under some of the same interference that gold is, and it's just being, we'll say, suppressed a little more aggressively than gold. But eventually, when the metals break out, and they will, and I just want to, point out one thing. In the last 2 years, at least gold has been rising, right? We're in the third leg of a secular bull market, and it started 2 years ago. It doesn't feel like that on a day-to-day basis because gold will get hit at certain times when investors start to get their confidence and feel good about it. But when you step back and look at the big picture, it is in the third leg, and it has been rising. Silver's having a bigger struggle, but once things do break free, the metals are all going to get pulled up. I mean, silver will not get left behind.
The U.S. government has many unfunded liabilities, but they're certainly not hard debts, or what I call military-affected debts. If the federal government decides to open a discussion regarding paying out less in Medicare or Medicaid or pension or Social Security, food stamps, disability, etc., these discussions will not instantly provoke a war, so it clearly has an agenda to tackle these before it tackles defaulting to foreign holders of bonds, which are hard debts. What do you think will be the public's reaction to opening this kind of a discussion up about the promises that the United States government has made?
So, Leo, that's the expectation that maybe they will be able to work this out and try to rein in some of these expenses and the costs. Like I think everyone knows, or they should know, the United States doesn't have a tax problem, it has a spending problem. If they follow the news and the reports, the tax revenues for the US government have been off the charts, highest they've ever been. But we have a spending problem. Now, to correct that and to actually get a better functioning society and workforce, incent people to work, and then be able to pay for their own health care, would require changes that in the interim, people may believe we may make those changes and therefore the dollar would remain strong. But I can fairly assure you it's not going to happen. It's just there is no way politically that this country will accept it. History says countries that go down the path that we're on will never correct themselves. That's why you hear calls for at some point there's going to have to be a breakdown, a reset, and the dollar's going to have to suffer a huge devaluation, and gold will go up.
Chris, how do you feel about the problems the U.S. faces when nearly 40% of its current jobs will become obsolete in 20 years?
Well, that's a global problem. It's particularly tough for the U.S. This is a challenge. Everyone loves to embrace technology and get very excited. And of course, you can't stop progress. It would be, artificial or contrived to try to turn the clock back and recreate, a production system and such from the past. But it's a challenge that no one wants to talk about because there is no solution. It's not, we're talking societal now. Of course, you can't have a strong currency with a weak society or broken or fragmented society. But, an idle, unemployed society is going to be truly problematic. I mean, this is why you're hearing talk about a guaranteed wage and such. It's kind of like an anticipation of not being able to employ anyone. But I don't believe, I know that is not a viable solution. Something that can be implemented, but it'll lead to a destabilized, dysfunctional society. So there are huge challenges. What will emerge to actually employ lots of people with all the displaced workers that, technology is causing. So I don't have the answer, but it's definitely going to be destabilizing. And it won't be just for the United States.
Does your analysis point to a panic regarding the US dollar or simply a sensible passing of the baton to a new reserve currency or a new system?
You know your history. The unique thing was when the pound sterling lost its position as reserve currency, that baton was passed to a friendly nation. And that was the first time in history where one power collapsed and it was surpassed by a friendly, and we were. Obviously, the United States and England had a unique relationship, unlike any other power-to-power changeover. Now, who this reserve currency is going to be, it could be a hostile, or it could be what is at least billed as something that's neutral, like the IMF. We don't know who's going to fill that void right now. Obviously, there's different nations who would vie for that, love that. Or there may be some sort of consensus, and that would be more of a we'll call a friendly baton pass. Now, passing the baton or not, if you're within the U.S., it's still going to be painful. I mean, the standard of living was affected negatively when it passed from England to the U.S. It's still going to be painful for the U.S., but I think those are the two options we're looking at.
Do cryptocurrencies present a match for precious metals?
Cryptocurrencies, or we'll call it digital money, is definitely here to stay. Now, whether it's going to remain as private cryptocurrencies or government issued, government doesn't like competition, and that will be a war that's coming up. But in either variety, to say that cryptocurrencies is the new gold is just not correct. And I'm not saying one is better than the other. They serve for the potential of cryptocurrencies, and really the jury's still out. It's a little too early to make a definitive statement about exactly what cryptocurrencies are. But except for cryptocurrencies and gold being both considered outside of the mainstream and an alternative to central bank created money and government enforced money, After that, there's really no comparison. I mean, they're just different. I mean, one is truly tangible in the physical sense. One exists solely in cyberspace. And, the list goes on. And it's, again, I'm not saying one is better than the other, but I would not abandon a physical precious metals position for that, thinking it's a substitute. I mean, you need to still keep physical precious metals in your portfolio. Getting involved in cryptocurrencies is really a separate thing, but it's not a replacement.
Could you explain what Neptune provides investors with?
Sure. Neptune Global is a full-service precious metals dealer. We do business with clients from around the world. Now, we deal in all the traditional bars and coins, but a big differentiator for us is in 2008, we created a product called the PMC ounce, which is the precious metals composite. The product got a patent in 2013. And to keep it simple, it is basically a turnkey weighted precious metals portfolio in each PMC ounce. So the best way to visualize it is a PMC ounce is like a pizza with 4 slices. There's one for gold, one for silver, one for platinum, and one for palladium. For each PMC ounce you buy, or if you buy like 100 or 1,000, those fractions aggregate up to a total number of gold, silver, platinum, palladium. And then there's a allocated inventory in a non-bank depository of those metals in the most liquid form, LBMA, NYMEX approved bars. And that amount of metal is assigned in the client's name at the depository level. So it's a storage account. It's not a fund. It's not an ETF. You're not getting a financial instrument. You are buying a certain number of PMC ounces, and immediately you're locking into a price and then being assigned allocated bullion in your name at the depository level. So that's a storage account that you are assigned to, not a financial instrument, which is totally different. So basically, the PMC ounce took the best of both worlds. It trades live, real-time pricing, completely liquid, no wait to buy or sell. It's done instantaneously. And then you're secured in your name with good bullion. Good bullion bars, the most liquid in the world. And that's what separates. Now, that diversified position in gold, silver, platinum, palladium is designed to give a blended return, right? The metals don't move in lockstep. And since you're getting this blended return, you don't have the price spikes or the level of volatility you have if you're in a single metal. So if a person was to go to our website, neptuneglobal.com, right on the home page, we have the chart that shows the performance of the PMC ounce since its inception in 2008 versus gold and silver. And you can see the return year over year and the smoother ride. So not only are you capturing the upside of precious metals, all 4, but you're managing the volatility. And Leor, that's good portfolio management. It's not just chasing returns. It means managing risk, and volatility is risk.
Could you explain more about your overall products with Neptune Global?
That's correct. All the traditional bars and coins, for Eagles and Maple Leafs and Krugerrands. So anything else another dealer would be able to provide, we do, along with a an exceptional and very transparent depository storage program with our partner depository, which isn't us. You don't want your dealer to be the depository. We work with one of the most reputable non-bank depositories in the world. And so, yes, we offer that full menu of services.
Chris, how can people reach out to you regarding your products?
Best way to learn about us quickly is to go to neptuneglobal.com. You can always hit the contact tab. You can also email us at info@neptuneglobal.com. And at the website is also our contact phone number where you can call us and ask to talk to a bullion specialist.
Chris, it was a pleasure having you on today and getting your insights. Thanks for your time today.
Thank you so much, Leor. Great talking to you.
Gold and silver, along with palladium and platinum, have been ways of reducing counterparty risk, and they provide stability of purchasing power, and at times of political panic and war, it might even create riches for you. Any sensible investor should consider owning some bullion. On top of that, with a higher degree of risk and with sophistication, there is a fortune to be made with gold and silver stocks, and at times with silver and zinc, copper, uranium, and other resources. Go to wealthresearchgroup.com and enjoy our wide array of special report downloads and expand your knowledge. I have said this before, it is my belief that in 5 years, by 2022, you will either be part of the wealthy or part of the lower class. There will be no middle class in America.